Well, today, more tech issues that I will have to talk to the streaming company about. I have no idea why things are happening the way they are, but hopefully somebody can see this. Let me know if you can hear me, if you can see me. Had to start a new stream. I don't know what's going on, whether it's YouTube issue or if it's a streaming issue on my software. But I will definitely have it sorted by next time. I know I said that last time, but it is what it is. Very frustrating, but I think my tech issues are tied to the stock market today. The stock market is down. The tech stocks are getting hammered, and the tech is getting hammered on my computer too. So who knows? I don't know what the problem is, but it is what it is. Anyway, welcome to Thursday evening. For whoever is here, I don't know who's here. I think there's a couple of people in the chat. People are probably over at the old stream trying to find this new one. And welcome to everybody. It's 7:38 p.m. UK time, 2:38 p.m. here in Orlando, Florida. Thursday evening live stream. Thank you to the few people that are here watching now, and to everybody that's going to watch this in the future. Welcome. Don't forget to join the Financial Thing YouTube group. Facebook group right here. Boom. Look at that. This is tech right here. The Financial Thing Facebook group. I tell you what, it's the place to be. If you want to come have a good time on a Saturday night, leave your wife on the couch, come to the Facebook group. It's where it's all happening. Yes, welcome, Aki Chap and Tony Walton. I think you are the only few people here. Maybe there's other people watching. I don't know. I can't understand what's going on with the tech. But yes, GameStop to the moon today. What the hell is going on? I have no idea. The markets are they make no sense at the moment, but we'll talk about that. We'll talk about a little bit of peer-to-peer news today. Moneything administration update. We'll talk about Ratesetter. We are going to talk about, let's see what's on the list. Octopus Choice. We're going to talk about Buy2Let Cars. We're going to talk about the stock market. Talk about LoanPad. A little bit of lending work stuff. Hit the thumbs up, please. I know today has been an absolute mess when it comes to the stream. I apologize. What can I say? I'm a human being. Things happen. I got to get this stream software working properly, and obviously it's not right now, which is annoying because I pay every month for this stuff, and you expect it to work, right? You expect if you're paying every month, you want something to work. It's not working. Anyway, it doesn't matter because the point is we're here now, and I'm glad to see everybody who is here. I don't know who's here, but if you're here, glad to see you. I can see the comments, though, in the chat coming in. Aki Chap is here. Tony's here. I think you're in... Tony, I'm trying to remember. Somerset, maybe. Accrington. Colin in the Peak District. Michael Shaw from Battle. Hillary Duke in Nottingham. We got David in the Chiltons, as always. Mike Powell, Deja Vu of Deja Vu of Deja Vu of Deja Vu. Is that a song? Maybe that's a cafe in Southampton. Brian, yeah, he said all of the others are waiting on two different streams. I don't know what to tell them. This is the one that's going right now. I tried to put the link in the other stream, and then when I started it up, that link didn't work. So I had to close that one down and restart another one, and I didn't know how to message people, and my brain is going, whoa, what the hell is going on with the tech today? But whatever. It is what it is. Whoever's here, happy to see you. Peter Clark in Huntingdon. Aha, here are the links you posted. Doesn't work. I know, Alan. Welcome to you. Paul in Kenilworth. Robert from Crete in Greece, and Stephen Solihull. Annabelle Nrin, ¿cómo está? Hola a todos. Back to you. Otra vez. Algunas veces or something. It's my new word of the week. It means sometimes. Probably butchered that. Keith Morrison, good old Lincoln. home of the cathedral. Yeah, Alan was saying, what, Elon's foray into Bitcoin hasn't done much for the Tesla share price. You know what? It's gonna be fine. Elon is he's no idiot. And I don't know if you've noticed, but it's not anything to do with Bitcoin that's messing up the Tesla share price. It's the entire market, which is completely in the red today and has been for a few days. I don't know if you can see my screen right here, but this looks like a whole lot of red to me. Whole lot of red. Focus. Red, 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 red. Red, 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 red. Yeah, the markets are tanking. My beloved Magnite stock is down 10%. We do have two greens here. You probably can't see this, but right here, Too Low Oil, which is in the trading 212 portfolio, only unfortunately have a small position, and then this one right here, Bonanza Creek Energy, which is a new addition. Anyway, algunas veces muy bien. Yeah, maybe you could post the link into the Facebook group. That would be super helpful. It seems like we have some people here finally. Thank you for everybody joining us. Sorry for the absolute mess of a stream tonight. Appreciate you doing that, Mike Powell. But well, let's go through the peer-to-peer lending news, since we have some news this week. Breaking news: the LendingWorks withdraw button somehow mysteriously popped back up onto my account, so I was able to actually take money out. I don't know why, whether it was a cookie issue or whatnot, but now I can withdraw money. Thank you to everybody that emailed me and said, this is how you withdraw money. I knew the button was there, but it just wasn't when I logged in last time. LoanPad update: £20 million now in loan book on secured, 53.7 million value. The loan to value has dropped down from 40% back down to 38%. 47 loans, 3 more than last week. 1 default, 5 extended loans. Average loan size has dropped down a little bit to 427,000. And the reason why I give you this update every week is because, I focus on LoanPad. I consider them to be a relatively safe place to put money. Again, not financial advice. Let me put the disclaimer up there. There we go. This is not intended to be financial advice. It's just what I feel about the company. And so I just give this little update every week because I think it's doing great. It's doing great. So, LoanPad, well done. They seem to be continuing in the right direction. It will be interesting to see how they do with that crowdfunding situation. So that's the LoanPad update. Everything just kind of shipping along as normal with them. So Ratesetter, they're going to be stopping their withdrawals from the 26th of March. So if you want to get your money out, you have money sat in a balance in there in a cash account. Withdraw it on the 26th. They're going to be doing this consolidation, and they'll be paying out investors on April 2nd. So, if you're on some kind of you got money in your account, just get it out now, because you won't be able to after the 26th of March. Our Metro Bank is going to offer Ratesetter loans through its branches. It's a very interesting situation to me, what's going on with this Metro acquisition, because Ratesetter has been such a losing company profitability-wise. They've lost, 17 million in the last 2 years. Can they turn their business profitable? They don't have a conditional guarantee of financing from Metro Bank, which is interesting. It means that Ratesetter has to perform in order to keep getting money from Metro Bank to fund its loans. I think the result for us as investors has been a really good outcome. Because we do take risk, and this is something I'm going to talk about today on the stream, and it kind of ties into this whole thing, this whole cryptocurrency thing that I've been talking about a lot on the Facebook group. And if it's too much for you, apologies. What I'm here to do is to bring you information, whether you agree or not, and it's stuff that I learn and I read about. But we do take risk as peer-to-peer lenders, and sometimes that risk can appear like it's diluted, right? You think maybe certain peer-to-peer lending companies are a lot less risky than others, which is true. But in the whole industry as a whole, we absolutely are taking risk every time we invest a single pound into any of these companies, including when we do it through stocks and shares, we're taking risk. So a favorable outcome of Ratesetter paying us all back, even though we might not have gotten the returns that we wanted to get, but I consider that, especially in these economic times which are turbulent, that's a success. And don't have the money yet. I'd already cashed out the majority of my Ratesetter investments, having been an investor in there for 5 years. I was pretty happy to get out when I did, but for everybody that's still invested, you're going to get your money back, I believe, on April 2nd. So good. I mean, that's a great result. Ratesetter wasn't making any money, so I think it was time for that acquisition to happen. Let's talk about Moneything. There's a creditor report that came out. One thing, if you're a Moneything investor like I am, you need to understand that we are not considered creditors according to this administration report. Means that we're probably going to see some capital losses, unfortunately. Again, this is the risk of investing. You're not going to get it right all the time. I've picked some bad investments in my time. I picked some stocks that have gone in the red. I saw one this week that was in the red, 10%. It happens. You're not going to win them all. I would love to meet that guy that's gone on the right side of every investment throughout his lifetime. I'm sure there's somebody out there, but me, I found for normal people that take risk and they spread their money across different things, you're going to have some winners. You're going to have some losers. Unfortunately, Moneything is going to be somewhat of a loser. How much, we don't know yet. But on the administration report, just go through, they got 50 outstanding loans to 18 borrowers, collectively owing £19.3 million. 24 loans to 2 borrowers are classified as performing. Unfortunately, they only have an outstanding capital of £1.1 million. That means that there's 2 borrowers that have a total of 24 loans across the platform. This is one of the problems with some peer-to-peer lenders that give out multiple loans to single borrowers. Thankfully, Moneything didn't loan these guys like 10 million across the 2 lenders, and it was only £1 million. So those two borrowers are classified as being performing, which means they're not in default. The loans are okay. That's 24 loans out of the 50. And then we got 5 loans to 4 borrowers, about £6 million that are non-performing. That means they're in default. So we got 6 million in default. 21 loans to 12 borrowers worth 12.1 million that are in recovery. So that means that legal action is being taken to recover those loans of 12.1 million. We've seen a capital loss so far of just a little bit over £250,000 since the administration begun. Now, there was a little piece in the administration report that I thought was really interesting, and that's the way that everything is structured. Moneything are actually held, the loans are held by the Moneything Security Trust Limited, which is MTSL, and Moneything Capital acted as an agent for MTSL, and they took charge of arranging continuous payment of the loans and chasing payments. So what the report says is that they are entitled to certain administrative charges for their activities on behalf of MTSL, such as monitoring and managing loans. So basically what it's saying is Moneything owes Moneything money, if you want to think of it on a very binary level, to the tune of £646,000. Now, conflict of interest there? Probably. I don't know. I never get surprised by these administration reports because things are set up the way they're set up. We're going to see how much we're going to get back from Moneything. I don't know. Fully expecting capital losses on it and to be used as some kind of a tax write-off, hopefully in the future. So, an unfortunate ending, but not as bad as certainly Lendy. I don't think it'll be as bad as Lendy. I don't think it'll be as bad as Funding Secure. Again, it depends what loans you're in. Um, I actually, was pretty lucky when it came to Moneything because I started to get a little uncomfortable with them before all of this happened. I did sell out of probably 60%, excuse me, of what I had on Moneything. Purely luck timing. It wasn't anything that I really knew about the company. It was more just a gut feeling last year that I thought, probably have too much allocated in this company, so I started to liquidate. Again, just very lucky timing. Wish I'd had the smarts to do the same with Lendy, but unfortunately not. Octopus Choice is closing. No surprise here. We kind of had seen the writing on the wall with them. Unfortunate because they were definitely one of my favorite peer-to-peer lending companies. Sad, there's a lot of people that work up there who some of them I met and were really good people, and but they're going to be closing their doors to their peer-to-peer lending side. And beautiful thing again, they expect no losses. They've already financed out 50% of their loan book, so if you're an Octopus Choice investor, you can pretty much expect that you are going to get most of your money back with them. I fully expect to get 100% back. Really didn't have much in there anyways, but again, another piece of good news, I think, for peer-to-peer lenders. If we can recover 100% capital, excellent. And if you can just hit that thumbs up button right now, it helps me with the algorithm of the YouTube search. Just hit it. It takes a second. Also, subscribe to the channel. We're very close to getting 1,000 subs. And as every week I tell you that without 1,000 subscribers, I cannot receive any monetary payment from YouTube for the ads that they put on my channel when these streams are replayed. So if you're not a subscriber, if you could do me the gracious good turn for me of becoming a subscriber, I really appreciate that. Thank you very much, and I'm very grateful to you being here. Again, ask questions in the stream, ask comments. If you disagree with me about something, put it in the chat. I'd love to hear about what your opinions are. So why did Octopus Choice close? It was a demand and supply thing. When you have severe financial downturns in economies, people want to they get scared, they exit. If you look at the stock market today, it's the same thing. When everything's in the red, people sell. It's a mentality thing. Totally emotional decisions can be made, especially if you're holding things you don't expect to hold long term. I had a couple of stocks today that I really wasn't planning on holding long term, but I made some money on it, so I just cut them loose because it's time. I tend not to do it on red days, but today I did it. The same with Octopus Choice. People were just getting nervous and they wanted to get money out. And Octopus Choice has always been a platform of liquidity, saying, we want to be able to provide you with liquidity. That was an important part of their business. And they felt when the liquidity started to dry up on their end that it was time to put the kibosh on their peer-to-peer lending business. I did have some hopes that they would restart it back up again, but really not surprised. It hasn't been operating for close to a year now, so that's going to be the end of them. And hopefully everybody gets their money back soon. Buy2Let Cars. This was a company that I had a conversation with a few months ago, and the FCA has paused them from making any further transactions and put some restrictions on them. FCA reported they were concerned about the finances, and they had ordered the company to cease regulated activity. Ratesetter is the company that owns Buy2Let Cars. And I know some of you that have been on the stream before, you actually invested through Buy2Let Cars. Again, peer-to-peer lending on where you literally buy a car as an investment, and then you lease it out to the owner, and then you get paid a return. There was something about it that just didn't, for me, it was, I'm not sure about this. I heard good things from people saying, I'm getting 15% a year. And whenever I hear these high return numbers, I always get this little red flag going, there's got to be something to it, that's a little off for me. So I didn't put any money in Buy2Let Cars. Not to say it's a bad company. I don't know what's going on with them behind closed doors, but obviously I think the FCA is becoming a little bit more touchy and a little bit more sensitive to protecting the consumer, especially what's happened with the London financial bond situation where the Bank of England guy, Powell, or whatever his name is, not Powell, I can't remember, but he's taken a lot of heat. He used to be the head of the FCA. So I think the FCA now is taking a little bit more of a harder line against companies that it feels may be operating in an incorrect manner, and possibly Buy2Let Cars has been a victim of this, and they challenge it, and they say, we have no idea. This is a complete surprise to us. We're well capitalized, but the FCA sees something there that they really don't like. So that's the news with them. Again, not an investor myself. Assets capital, if you want to get out, you can pretty much do it at close to par now. The discount rate is very, very low. I didn't check it today, but the last time I checked last week it was at 0.09%. Lowest that I have ever seen through it. And as far as like new peer-to-peer lending companies, my top 5 has generally really been the same. Octopus Choice is going to come off that top 5 now at this point, since they're closing their doors. Probably going to be replaced with Crowd Property. Crowd Property remains kind of low on my list, but just because of the amount of time I've been invested through, hasn't been very long, so I'm waiting to see what's going on with them. Although so far so good, but it's going to be the same. LoanPad, Cufflink, Assets Capital, LendInvest, and Crowd Property probably make up that 5, with probably Unbolted as a 6th at this point. But there really isn't a lot of options out there, in this constricting peer-to-peer lending environment that we're seeing right now. That if somebody came up to me and said, well, is there any new ones out there? Possibly a couple of other ones, maybe, PLend I'm looking at, Lendery, which is the crypto in Germany. Again, I consider a little bit more high risk, but not a ton of options out there for places to put money at this point. So that's what, this is why sometimes you have to pivot, right? I mean, Financial Thing originally started off as a completely peer-to-peer lending resource, and then, with the investing side of things came into play. We talk a lot about the index trackers, why people should look at those if you're looking to get invested in the stock market, why you want to look at things like the S&P 500 or a broad market US index tracker versus the FTSE. And then we start to look at the cryptocurrency position now. It's something that I started back in 2017. Didn't really write about it much then, because I wasn't certain that this was going to be an investment that I would continue to put money into. But as time went on, I learned more about it. I started researching it, and became something that I thought, yes, I feel like this is a place where I'm happy to put my own money. So I then bring that information to you, because, that's my goal here, is to not telling anybody what to do. I just tell you my thoughts and feelings and my experiences, and you guys have to make your own decisions. So I don't think Elon Musk's foray into Bitcoin was a bad thing at all. I think he's very smart. It's going to pay off for him very, very nicely in the future. Algunas veces. Mike Powell thinks that Elon's a complete idiot. Tesla's dropped in line with Bitcoin. Will drop more if the SEC investigates him. Hey, you're entitled to your opinion, Mike. Sometimes we disagree on these things. I don't think he's a complete idiot. I think he's a little bit out there, but I think he's a very smart businessman. Probably one of the most influential people in the world at the moment. Hi, Arthur Atchison. Nice to meet you. Nice to see you, not nice to meet you. Chimpo Naughty's here in Darren in Cambridge. Hello, darkness, smile, friend. Oh, wait, I can see in here now. Oh, I didn't know if that was part of the song lyrics. Da, 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 da. Yeah. Stephen Hale in Nottingham, how are you? LoanPad weekly update, he's on commission. Absolutely. I wish. You know, LoanPad needs to put me on commission. Definitely. Uh, Stephen Hale says pennies and pounds every day. Nice to see totals going up. That's LoanPad. You get paid daily interest, which I love. It's nice to watch it, right? Hi, Dividend Dave Dawson is here. How are you, Dave? Paul Bagworth said Metro Bank posted bad results. Metro Bank has never been one of those businesses which has posted really good earnings results. So, you know, maybe this Ratesetter acquisition is a bad deal for them. We'll wait to see. Next week, a shirt with the LoanPad logo. No, today we have the, Mirage Las Vegas t-shirt retro logo from the old Mirage. I tried to pull out a football shirt, but they're a bit dirty. Debbie at Mixed Media Arts, nice to see you in Grand Cayman. I always want to say Debbie at Mixed Martial Arts because it just looks like that to me. Peter Clark, Ratesetter was good with decent returns, but all now repaid. Good, that's really good to hear. Glad to hear. Chica Boy is here. Nice to see you, Chica Boy. Hobnob crumbs are on the way. Yeah, Paul Brian says 23 new subscribers and Lawrence hits the 1,000. It's been a long build process to go from 0 up to 1,000 people. You'd be surprised how hard it is. Some people hit it fast, right? For me, it's not been easy, but we're grinding away. After the 1,000, there'll be the 2,000, and hopefully we'll continue to spread the message of investment to more and more people out there. My goal is also to reach the younger people out there. I don't think there's enough information for the younger people. They have the time on their side, which is an amazing thing. Yes, it is on. The stream is on. We are here. Mike Powell says, that's the standard peer-to-peer structure. The security company holds the security, but it's a dormant company. It has no resources. It contracts with the agent to carry out any functions. Yeah, I mean, I totally understand that, but the only problem is I hate to think of investors losing money and these companies pocketing cash ahead of the investors and the creditors because they have a certain structure that's set up for them to benefit if things go tits up. So that's what I want. I want to see the investors get paid, back first. I just want to see the investors get paid back first. If a peer-to-peer lending company goes under, why should the peer-to-peer company get paid back first? I hate that. Andrew Bailey, former head of the FCA. Yep, totally got that wrong. FCA financially cute afterwards. Interesting. I bet Andrew Bailey has Bank of England invested in Bitcoin, money invested in Bitcoin. Hey, if he's smart, he's going to look like a genius. Yeah. Mike Powell, why don't you pimp the stream on P2P Independent Forum? Yeah, maybe I will. Yeah, I like that. Pimp the stream. I'm going to get a t-shirt printed up, Pimp the stream. I'm nervous about Unbolted moving into property and LoanPad selling shares. Any thoughts? Well, Unbolted obviously has a separate company, OnStep, which I don't know what that's going to be like. It makes sense, when I talk to the representative about it, the idea of the business made sense. I don't know how it's going to do. I think it's, again, separated. Hopefully they don't merge it together and they keep Unbolted as pawnbroking. So remains to be seen. As far as LoanPad selling shares, they just want to fundraise to grow. I don't think there's anything wrong with that. Yeah, I wouldn't buy. It's not my thing. I don't like to buy seeded shares. Yeah, it's a sister company that's moving. David says, has the owner of LoanPad done any publicity? I can't see anything. He's a little shy, I have to be honest. I've trying to get him on the stream. He's very conscious of the FCA and him saying things that break compliance. Some peer-to-peer lending owners are very, a little bit more looser with their words, but Louis is a lawyer, so he's very careful about what he wants to say. So that would be the reason for the lack of publicity, but I do hound him to come on the stream. He just wants to make sure that what he's able to talk about gets through his compliance officer, because apparently he's very big on, he's got him by the cojones, and if he says the wrong thing, he's going to get his wrist slapped. But I've interviewed Louis a couple of times at his office, Louis of LoanPad, and each time the compliance thing came up, and he was saying to me, Lawrence, can you just wait and not post that, because I think I've said some things in there that are probably going to get my compliance officer mad. So yeah. Debbie says, I've added 2 new subscriptions for you to boost your numbers. What are your thoughts on Blend Network? Thank you very much, Debbie. I appreciate that. I said when I get to 1,000 subscribers, we're going to do another cryptocurrency giveaway. I don't know how much I'm going to give away. It depends whether I have to buy dog food that week or not. But get me to 1,000 subscribers. We'll give away some cryptocurrency live on the screen. We'll use the spinning prize wheel again like last time. Have some fun with it. But thank you for that, Debbie. Very much appreciated. Welcome, welcome. My current thoughts on Blend Network are good thoughts. I've seen Blend do some good things. I just don't have a lot of extra capital right now to invest £1,000 per loan. But if I did, Blend Network would definitely be a place I would be happy to put my money. I think there's a lot of demand there too, so you may have a difficult time getting your money actually invested. But they're very picky about what they bring to the platform. They want to have a good record of loans. They don't want to bring any shite to you as an investor. So sometimes you're going to see that you won't see as many loans available. There's always a difficult balance for that, because some of the platforms are trying to write loans, and they maybe are moving their quality control a little bit down to write more loans to keep the investors happy. But Blend and Jan is very much sticking to this is the way it's going to be. Sometimes deal flow might be less, but we're only going to provide you with quality. That's what he wants to do. Alan said, Blend has just had 2 new loans just as I got fed up and moved out my cash. Well, yeah. Got to be patient, man. Patience is a virtue. Yeah, so a couple of things I want to talk about this week is I keep getting the same questions over and over again in the email about these tracker funds that I buy, and why the hell I don't invest in the FTSE 100. So I want to show you a chart, and I think this chart really sums up everything for me anyways about why I do not invest in the FTSE. Here we go. Let's look at this chart. This is the S&P 500 versus the FTSE 100 over a period of a very, very long time. You can see the FTSE started here in 1984 of this index, and the S&P 500 kind of followed it. And look at the correlation here between the U.S. So we got the this is the S&P 500 down here in this dark line. Hopefully you can see, but you can see this very tight correlation between the S&P and the light line of the FTSE 100, and it didn't really change very much until right here in 1995, when we started to see this really big separation, right? Especially here in the bubble of the 2000. That's when we obviously had this, the stock bubble of the tech bubble happening, and this big price inflation of all the stocks. But you can see here, look at the correlations between the FTSE 100, how close is it? You can see this line right down here, how it spikes down here on the FTSE and here on the S&P 500 again here during the crash of 2000, from 2000 on down to 2002, and then again 2008. We see the markets really dropping in this correlated line, and then we really see this this struggle that the FTSE has had over the last 11 years to gain any type of ground on investment returns. So, of course, history is the only thing that we have to go off of investing, and this is personally why I don't touch the FTSE 100 at all. The only thing I own right now is 2 shares in 2 companies in the UK, which is Tullow Oil and Lloyds Bank. That's it. I don't own any FTSE index trackers for this exact reason. If we are sitting at what's the price today? I don't know. Tell me the price. Tell me the price. I don't know what the price is of the FTSE. No, 6,651. Okay. So if we look at this low point back here in November of October of 2020, we're almost exactly level with this low point of 2011. So for 9 years, anybody that was invested in a FTSE tracker, probably a lot of English shares, has just seen absolutely no return. So we look at the S&P 500 from 2011 to now, we've seen some really huge returns. Now, if we go way back to the total amount of time that we're looking for, which is the max interval, we're going to see the difference in percentage returns here, right? Obviously a big difference. And this is just why I invest in, through the S&P 500. If we look at just the last 5 years alone, 96.9% in the S&P, 9.24% in the FTSE. Right, it's not good. The FTSE's, it's never been a really great way of investing money, and this is why I keep telling people my preference, either a US equity index tracker or a world index tracker that doesn't have a lot of FTSE in it. The FTSE has dragged its feet for so long. We can even go back. Let's see. We look at from 1984 to now, FTSE 502% increase, and 4 times as much in the S&P 500. I mean, that's a lot of money that you've given up just to be stuck in this way of thinking that the English, I must, because I live in England, I must invest in the FTSE because that's the right thing to do. I'm patriotic, or I don't really understand about the American market. But the fact of the matter is the numbers, they just don't lie. They don't lie. I mean, 2,247% versus 507%. That number doesn't lie. And that number, I believe, is not going to change, So, hey, if you want to invest in the FTSE 100, stock pick or whatnot, some people are great at picking out stocks. I'm personally not. I don't really like to do it. I find it very stressful. I still continue to use the majority of my investments through an index tracker. I'm not going to get rich. You're not going to get 200% returns in a year off it. I think it's up about 13 or 14% over the last 6 months. Very happy with that. Slow and steady wins the race. But the FTSE is not looking really good. And here's the interesting thing. These correlations between the S&P drops and the FTSE drops are almost identical. You really don't see them doing too many opposite things. So I don't think you're going to get this big return here out of the FTSE that people are saying, well, now's the time to go into the FTSE. I don't think it's the time. I don't think that that's true. I think you stick to what history has shown in the past, and especially such a long historical run, really separating out here in 1995 onwards. It's hard to negate those results. It's hard to really argue against them. Let's show you the Trading 212 portfolio, what we've done this week for anybody that's been following. This is where I started off with £5,500 And right now we're at £11,316. We've taken a bit of a hit this week with the markets obviously being pulling back, so this is to be expected, but still over 100% gains on this, so very happy. Trimmed some things this week. You're going to see what did we get rid of? We got rid of Tesla, completely exited out of the Tesla position. The thing was up like 65 or 70%. I think that at that point, I don't think this is because of Bitcoin personally. I think Tesla is a company that's way overinflated in value. Anyways, I think they'll probably continue to do well. Who knows? They've had news this week. They're going to have to shut down one of their production lines because they can't get enough computer chips. Happy to pull the money out, see what happens with them. Maybe the price drops back to $300 and $350 again. Maybe jump back in again to that. Trimmed some of this Magnite position too. Took profits. And what else? What else did I do? Let me see if I can pull up the history because I made a few trades this week. So you can hear Tesla. Sold some Magnite. We sold this Alteryx position that has been in the negative. I think tech is going to have a really hard time over the next few months as people move into cyclicals like oil. So we got rid of, again, here over 68 shares of Magnite, which has done really, really well. And those are really the major changes. Again, bought this Bonanza Creek energy company. Had a pretty good run over the last week. So up about 19.7%. I'm up about a little bit over 4.5%. Well, just about 4.48%. Again, really moving into those energy exploration oil. I think cyclical right now is probably going to be the way to go. As you can see, I don't know if it's the same in the UK, but gas prices and petrol in the US has really started to rise up. Joe Biden is probably a reason for that, but yeah, so that's what's going on in the portfolio. Right now I'm sitting in a good amount of cash. Gonna wait and see what happens over the next few days. See if this market pullback continues. I think we're going to see more of a pullback with the shares. So it'll be a good time to be able to pop back in on some lower prices. I wanted to talk about a little bit about gold because people are always saying, I'm talking about Bitcoin, well, gold. Yeah. Look at gold. If people say, well, gold's not volatile, it's a good asset store of value. Look at this from 1980 down to 2001. Actually saw gold get absolutely hammered. Fine if you happen to be lucky and buying in the 1970s. But if you had bought gold at, say, in this area or this area, you would have seen... especially I know a lot of people that bought gold in the $1,000, $1,100 range, and when it started to drop like this, they started to sell. Missed timing cost them a lot of money. This is a reason why gold is not really considered a necessarily a great store of value anymore. I mean, look at these price fluctuations that we've had, and people say, "Well, Bitcoin's volatile. Bitcoin's volatile." Okay. I see volatility here in gold. If you're talking about an asset that goes down from $2,100 an ounce down to 11, it's lost $1,000 of its value, over a period of 4 years. That shows me there's a certain level of risk in gold that people don't really understand. There's going to be times when gold does well, and again, timing is a huge factor. If you happen to get lucky and go in at 2001, you would be very happy right now. But a lot of people don't go in at the bottom. They tend to go in at the top because it's an emotional, mental decision. They go in when they see prices are rising, when everything is green. People have been flooding into cryptocurrency once they've seen these huge hikes in prices. And only the very, very savvy risk takers and the people that have the stomach for it are the ones that are buying in here at $385, willing to make that, that climb. what you see a lot of the times is this somebody that bought at 680 has watched it decline and decline and decline. Probably sells out at some point, usually around maybe $400 or $500. They've seen their investment do nothing for 3 or 4 years, so they sell out. They're not buying back in most of the time at the bottom. They're going to buy back in here when they feel more comfortable and they've seen that everybody else is buying and the demand is high and the prices are rising. So, there's definitely some negative issues with holding gold. This is why I talk about Bitcoin so much, because I believe as a store of value, it's definitely a good thing. Let's see. I don't know. I don't know. I personally, I don't really own much gold. I have a small gold ETF. I'm feeling more comfortable putting my money into Bitcoin. For anybody that really wants to learn, Bitcoin is a very, very misunderstood form of storage of value. I hear it all the time. It's a Ponzi scheme. It's backed by nothing. It's full of criminals. It's gonna crash. And there's a very interesting article which I would highly recommend if you're interested in investing and you just want to be an open-minded person. And I'm very open-minded to everything. I look at, managed funds sometimes. I try to be objective and be unbiased. And then I make a decision. And I have a friend who's a very big investor in the stock market, and he is completely against Bitcoin. He says it's dead, that it's going to go to zero, and he thinks it's terrible, and I think he's wrong. And I said to him, just read these articles, and he said, no, I don't want to read the articles because I already know. I know what I know. Well, there are some amazing articles out there with a lot of good information that really break down what Bitcoin is and why it's here, why it's going to be here to stay. So I posted on the Facebook group, there's a great article called Bitcoin is the Great Definancialization. And I found this very, very fascinating. And I would recommend all of the articles by this author, Parker Lewis, are excellent. Very, very good. Probably some of the best articles I've written on Bitcoin. But I wanted to show you this, so I think this is very important. Hold on one second. Hold up. Michael Saylor. This is a tweet from a guy named Michael Saylor from MicroStrategies. This guy is probably one of the biggest Bitcoin bulls that we've seen. He's bought, owns a couple of billion, $2.5 billion. I think he's going to buy another billion of this stuff. Started buying it in the $18,000 range. He says stocks and bonds and real estate are all fiat instruments. For anybody that doesn't know, fiat is fiat money, dollars, pounds, yen, euros. Stocks and bonds and real estate are all fiat instruments that derive their value from the future stream of cash flows, discounted by the rate of monetary expansion plus risk premium. So, for instance, a stock is only going to increase over the long term if that company can show that they're making money, right? So everything is tied to that. Now, all of these things fail as a store of value unless they can grow cash flows faster than the Fed can print money. He's talking about the U.S., but the same thing is going on in England, in the U.K., and other countries in the world. The Fed continues to print. The central banks print more money. So Michael is saying, this I believe to be 100% true, that these assets will eventually be compromised by this continued money printing. So if you get a chance to read this article, and they also have it on Audible, if you like listening to stuff, you can go to Apple's podcast page and just Google Parker Lewis Bitcoin. This whole article here is talking about definancialization. But this I thought was very, very poignant, this last paragraph. The difference between saving in Bitcoin, which is, in his opinion, not taking risk. Again, he's just presenting an opinion. So the difference between saving in Bitcoin, not taking risk, and financial investing, taking risk, is night and day. There's something cathartic about saving in a form of money that works in your favor rather than against it. It's akin to taking a massive weight being lifted off your shoulders that you didn't even know existed. It might not be apparent immediately, but over time, saving in a form of money with proper incentives ultimately allows one to think and worry about money less rather than obsess over it. Imagine a world in which billions of people, all using a common currency, can focus more on creating value for those around them rather than worrying about making money in financial investing. What the future looks like exactly, no one knows, but Bitcoin will definancialize the economy, and it will no doubt be a renaissance. Yeah, a really great article, fascinating reading. I highly recommend it. What he is really saying is that we worry a lot about money in life, right? We go through our life being told we need to work, we need to have a business, and we need to save, and we need to invest, okay? You don't worry very much about money that's sat in a savings account collecting 0.5% or 1% interest, right? You don't worry about that. What you do worry about is your investments. When you put money in the stock market, when you put money into things like bonds, or when you invest in a business, you worry. You constantly. I mean, I do. I'm a business owner. I derive my income from my own businesses, so I do worry. I worry about money. I look at my stock holdings every day. When I see red on my stocks, it creates a little bit of an emotional worry, and when I see green, I get a little bit of a high. So I'm on this constant roller coaster of what are my investments doing. When we put money in a savings account, we don't worry about that because the money's there. Okay, the problem is that with the government's printing money and creating, this devaluation of money, and goods and services become more expensive. Look at the cost of property over time. It's going up. We have to generate more money to buy what we need. So it becomes stressful because we put the money in the bank account and it's losing money over the time to inflation. But in order to gain any type of returns, we have to take risk. And ask anybody that's invested through Lendy or Funding Secure or Moneything. We had to take risk. And this type of risk is very stressful for people. It's fine when you win. It's fine when you see your stock market portfolio go up 100%. But if you looked at your portfolio in March or in 2008, you likely felt some form of stress. And what this article is basically saying is that Bitcoin will eventually provide, and I believe it's providing it now, but it's going to provide a way for you to be able to store your assets, which you don't want to be holding pounds, you don't want to be holding dollars because it's getting deflated by the government. So Bitcoin is going to represent a way for you to be able to store an asset of value, and you not having to worry so much about what it's doing, because over a long period of time, the Bitcoin is just going to keep becoming more valuable. Okay. Now, for people that say, well, Bitcoin doesn't have any value, it does, because gold has a perceived value, right? Gold is a piece of metal. And the only reason we perceive that gold has value is because over a period of hundreds and hundreds and hundreds of years, it's become adopted, right? It's become adopted as a form of value. But I guarantee you, when the first person pulled a piece of gold out of the ground, there wasn't any value there. Nobody knew what the value was. It became adopted. It's perceived. It's like a piece of art, right? Piece of art has a perceived value, right? So as these things that we call Bitcoin become more adopted throughout time, the perceived value will be increased, and people are going to flock to an alternative way of investing because they want to be a part of it. I mean, you're seeing it right now. Bitcoin is on the tongues of people because it's a viable form of investing, right? And for people that say, well, it's not backed by anything, it's just a piece of digital code. Yes, and that piece of digital code, resources are needed to mine this stuff. It doesn't just fly out of thin air. It's a finite supply of 21 million. There will never be any more than 21 million. And in order to get those Bitcoins and to create them, electricity needs to be used to solve a very, very complex mathematical puzzle that people spend thousands and thousands of pounds in computer power and electricity to generate. It's like digital mining, right? It's like getting an excavator and digging up a piece of gold out of the ground that you have to pay for. Bitcoin is no different. So there is the value. And also the value is in the network, right? So if you looked at Amazon stock, for instance, for a long time, Amazon stock didn't do well. It was flat because people didn't really understand where the perceived value of Amazon is. The perceived value of Amazon now is through, most of the Amazon members taking Prime memberships for the network. Now they have the television. Now they have the movies and the music. They have the, in the US, fast delivery times if you're a Prime member. So the value has become part of this network. And this is what Bitcoin represents. It's a network of millions of different peers and computer systems and code that's very pure. And this is why it's valuable. This is why there is value to it. A lot of people don't understand that. I think it's very interesting what the article says. Look, if you're not interested in Bitcoin, you probably don't want to listen to me ramble on about this, but I think it's something you should be interested in. And I'll just say this. What the article says is that the financial system that we've been put into has been very calculated, like almost by design, right? Central banks print money. It means that we have to invest. We can't leave it sat in the savings account anymore. Benefits the financial institutions, the actively managed funds that we have to risk because we're taking on considerable risk putting our money into stocks and shares. We have to take on that risk. Central bank keeps printing. Store of value, at least in the USA, loses 2% a year, similar in the UK with inflation. Imagine that your money, if it loses 2% a year sitting in a bank account to inflation, over 10 years, you've just lost 20% of all of your value. I mean, that's killing you. Yeah, that's absolutely killing you. I think the money, and I agree with the article. It says the money has been designed to be devalued on purpose. And it's put us into this situation now with massive debt from the government that is shouldered by us taxpayers and will come home to roost at some point. Hasn't yet. But, I'll give you an example. They're talking about in the UK changing capital gains tax from 20% to 40%. This is how it will come home to roost. The taxpayer will pay for the debt. So, if money stored real value and didn't deflate, right, people wouldn't need to invest money and it would just stay in their bank accounts. They probably wouldn't spend as much. There'd be more unemployment. Big corporations wouldn't profit as much because people are not out there spending their money because their money now becomes worth more. If they're getting, saving their cash and they're getting 10% interest on their money, you think people are going to be out spending as much? No, it would have a negative impact. So if you think about it, our money is designed to be devalued and to stay low in value. Wall Street would be diminished, right? The stock market, if you didn't need to spend you didn't need to invest to get a return on your money, Wall Street would suffer. The financial districts would suffer, and the rich and the powerful will become less powerful because a lot of these people work in finance. It's very interesting anyway. What we have right now is a world that we've been put into that is really telling us not to save. It's telling us don't save your currency. Don't save your pounds in a bank account. Don't put your money into a savings account. It's literally been that way by design, and this is the beauty of why Bitcoin exists. If you read the white paper on Bitcoin's website why this thing was even started. It was all because of, based on debt and what's going on with the economies. And after the financial crash in 2008, 2009, people understood we need a different asset store of value to keep our money, to be worth something. Because if we hold dollars and pounds, we end up losing it to inflation. So, fascinating article. I love it. I love reading about this stuff. Maybe I'm an idealist. Maybe I'll be completely wrong about this. I don't think so. I think you're just going to see more and more people start to adopt this new digital asset. Just think about when gold started. What happened? It was not an adopted form of value. It just happened to turn into that over the period of time, especially when governments and started to store it. We could quite possibly see that now with Bitcoin. Bitcoin will not be banned. You're going to get some countries that are going to try to do that, but over the long run, the rich and powerful that are now starting to own the currency of Bitcoin will step in and say, nope, that's not happening. So go read the articles anyway. I think it's worth a read. Tony says, can Bitcoins be transferred to grandparent to grandchild? Absolutely. You can literally just save it to your own hardware wallet and give it to whoever you want. You have to think, remember, by the way, if you do own cryptocurrency, there are tax implications if you sell. You start trading. I don't think you want to trade. I don't think you want to sell Bitcoins. Let's see. I'm going to go through your comments real quick. If you have any comments, I know some of you don't like Bitcoin. I've read a lot of comments on our website group about it, saying it's a Ponzi scheme. I personally don't believe that at all. There's a lot of fear involved when you talk about a new asset, but you're in the infancy right now. Absolutely in the infancy. You're going to see some volatility for sure, but you're in the infancy. And the beautiful thing is you don't need a lot of it to succeed. This thing goes to $1 million a coin. How much do you really need? Brian says, when the markets tank, time to buy in. Yes, you got to know when. That's the tricky part. It's hard to know when. I don't think the markets are done with their red yet. I think you're going to see. Dave said, I reckon a lot of pension funds will be back in the FTSE 100. Of course, because it's an old school mentality thinking of these old school English investors. Yeah, I must invest in British Petroleum and BT and, the FTSE 100. I live in England. God save the Queen. I'm as patriotic as the next person. Absolutely proud to be British, don't get me wrong. I'm just not tied to any investment form that is not really doing well. Mike says, what does it look like if you take out the fangs? Yeah, it's going to look different. It will, but you don't take out the fangs because the fangs are in there. They make up the top 5 make up 17%. So it's going to look somewhat different, but that's just the way it is. Those companies are going to continue to do well. And if you take out the fangs, they'll be replaced by somebody else, another company. So same with the FTSE. If you look at the top 5 of the FTSE, it's probably made up of, I believe at one point, was it like Shell, BT, and HSBC made up 25% of the entire FTSE. Dow looks ready for a massive correction. Who knows? You'd have thought that would have already happened again, but it hasn't. Facebook link's not working. What are you talking about? Facebook links. Let me check. You talk about for the Facebook group or what? Oh no. If you want to join the Facebook group, you can do so. Here, I'll put the link in the chat. Yeah, I think we could see a correction for sure. The Dow. What is the 212 thing? How can I look at it? You can't. But if you look at the videos that I make on the YouTube channel, you'll see I do an update every couple of weeks. But if you want to see the 212 portfolio, it is right here. This is my trading 212 portfolio that I started as kind of an experiment to see if I could beat the index trackers that I invest through. And so far we've done pretty good with it. 11,242 pounds from a 5,500 pound investment. So yeah, I would say that's a good result. Definitely wouldn't be typical for long term. You can see some of these stocks here in the red. Aurora minus 11%, Centrus Energy minus 15%. So this is kind of generally what happens when you try to pick out single stocks. You're going to have some winners and some losers. If I'd have happened to go big onto Aurora Cannabis or onto Centrus, then my results will look very different. I just happen to pick these two right here, Lloyd's and Magnite, that have really pushed the portfolio higher. But if I'd have picked, say, Centrus and Aurora as my main two, then the results would have been significantly different. But if you go to the Financial Thing YouTube channel, you can see the videos that I've made with the updates. We're down quite a lot. We were over 12,500 at one point, so we've taken a 1,300 pound pullback because of the market correction. So yeah, that's what happens with these stocks and shares. They go up, they go down. Yeah, Dave says, what do they say? It's never wrong to take a profit. Yes, and this is the psychology of investing, right? It's crazy because I was looking at, say, my Tesla stock today, and I'm like, man, it's down. I think it was at $900 at one point. It's down to $700, and I thought, I don't really want to sell on these red days, but you know what? You take the profit and you just move on. Just move on. Mike says the problem the FTSE has that any companies that are likely to drive the index up significantly get bought out and delisted. Yeah, I mean, do you think so? I mean, aren't the big major companies that make up most of the FTSE 100, are they getting bought out? I don't think those huge oil companies are. I don't even know who's at the top of the FTSE. I just really don't pay attention to it anymore because it's not something I have any interest investing. Mike, Tesla has significant gold positions. The thing about gold is it's safe haven, so it will drop when the economy improves. It's not volatile on a day-to-day basis like Bitcoin. Yeah, I agree. It's not. You're not going to see those big swings. But I'll tell you what, I think you can in the future. I think that you're going to see a change in the way you view investments now. I don't think it's going to be like that in the future. You may at some point see gold start to become volatile as people move away from it as a store of asset. So we'll see. That's my view. I may be wrong, but David Lightly says, I see Cufflink finally filed their accounts last week, just 11 months late. Accounts show negative net worth and currently looking for new shareholders to support the business. Okay, I'll take a look at it. I haven't read it, but I will look at it. Stephen said less and less options out there in Ratesetter, crowd property blend, assets, capital loan pad have hits and Moneything lending and collateral. Me too. Hits suck. Don't want hits. Got to avoid the hits. It's like anything with investing. It's like you're walking through this field trying not to step on the landmines because they're existing under the earth and you can't see them all the time. Those are the hits. Dave said that when Mr. Normal in the street is talking about an investment, it's time to be selling out. Yeah, is it though? I mean, yes, I understand that's kind of an old school saying, but you could say the same thing for index trackers, right? When the shift started to happen from actively managed funds, people started talking about index trackers, and they were all the rage. Like, go into the passive funds because the fees were low. Sometimes when the sentiment of Mr. Normal starts to wake up and get information about something that actually is a good asset, maybe it's not such a bad thing that Mr. Normal is talking about it. There's a lot of education now that didn't used to exist about these new things. Yeah, about these new. Mike says, people don't buy gold on the basis of gold prices. They buy on the basis of the price of everything else. You're talking about advanced investors, though. I don't, think people are very informed when it comes to why the prices of things are the way they are. And I think a lot of people buy things to try to get a return out of them. So what are the big boys doing now? We'll know in 10 years, I find. Yeah. I get the Bitcoin store of value, but the problem is the value is measured in fiat currency. Until you can spend Bitcoin, generally the value doesn't translate outside its relation with fiat. Yeah, that's going to take time, to move away from that if they do, but it has to be measured against something, because otherwise people won't know what the hell. I mean, if somebody said to you, Mike, you have 0.032 Bitcoins, your brain won't be able to translate that into any kind of value, because we are set up in life to know what the value of a dollar or a pound is. So eventually that will maybe change. I don't know. We'll see. I don't think that's a problem, though. That's just a way that we measure it to know what we have, right? I don't think it's a problem. I'm new to Blendweb Network. Do they have a IFISA transfer in option? Yeah, I believe they do. Blend Network. Can't type. Let's have a look. See what they're transferring. Some do, some don't. Maybe somebody else can answer that. I forgot. I forget, to be honest. I don't remember if they have an IFISA. Maybe they don't. Some of the companies find it a complete pain in the butt to offer them. ISIF. I'm not spelling this right at all. Trying to look on their website. And maybe they don't. Maybe they don't have an ISA. Blend, do you have an ISA? Why do you not have an ISA? No, I guess they don't. Interesting. I don't invest in peer-to-peer ISAs myself, so. The creator of Bitcoin is suing the operators of Bitcoin because someone nicked his Bitcoin. And they should be able to recover it for him. Interesting. I hadn't heard about that. Yeah, hacking is definitely... There's a lot of scams. For sure, you have to be careful. I think that the smart thing to do is to put it on a hardware wallet that you own in your possession and put it in a safety deposit box somewhere. Make sure you have the security keys written down. It's going to happen too. Look, when you have a new asset like this, especially when the price is dropping, if this thing goes to $40,000, you're going to see the media just jump all over and say, oh, this is a terrible thing, terrible investment. But when it's going up, you don't tend to hear too many bad things because media jumps on bad news. Could you please post the author and articles Bitcoins for Skeptics here on the Facebook group so we can do our homework? Yeah, absolutely. I did actually post an article on the Facebook group today. But if you Google, here's the link. The articles that I think are worthy, definitely of a read are from Parker Lewis, which I put the link down there. The Nakamoto Institute. There's a ton of educational information on there. Yeah, you're always going to have those stories about people losing Bitcoin in their wallet, can't get access to it. Because people are not very smart sometimes. There are ups and downs with the stock market, absolutely. But I thought that that was very interesting about how it says, the investment risk that we take causes stress on ourselves because we're always watching constantly. Am I going to have enough to retire? That's the biggest problem, right? Do I have enough in a pension to where I can actually stop working one day? Imagine we go through our entire lives worrying about if we're going to save and invest enough money to have enough money to be able to retire one day. That's a lot of stress. Maybe not for people that make millions of dollars a year, but for our average person out there who's making 30, 40, 50, 60,000 pounds a year, they're constantly worrying about how they're going to have enough money to retire. Yeah, right now capital gains tax is up to 20%. Yep. It's going to change though, I guarantee. Guarantee you next tax year capital gains tax is going to get hiked up. And the thing about, you have to be careful with the tax too. I don't have a plan on selling any of my Bitcoins, as I don't want to pay tax on it. So, unless I really need it. I think Bitcoin is going to be very hard for the taxman to trace. No, because nearly all of the trading platforms the legitimate places where you actually buy Bitcoin is they do tax reporting. So all of your trades are documented and the taxman will get you. Annabelle, the article is it's the first article on list number 16. Bitcoin is the great definancialization. I have trouble with that. It was written on December the 19th, 2020. Bitcoin is the great definancialization. I love this article. Everybody should read it. Whether you're a skeptic or not, read that. Steven says he's looking at options again, but lots of study needed. Yeah, options are again, they have their ups and downsides. If you want to sign up for any of these financial companies that I talk about, go to my page on financialthing.com. It says cashback. You can see if there's a link on there. I don't know if Unbolted has any cashback at the moment. Let me take a look. Sometimes they change things, but yeah, if you use the link on my website, I'll put it in the comments here. Sometimes you get free money. Dave says, I like the global trackers. I feel the Asian side of the world is going to do very well. Understood. Hobnobs. You're talking about hobnobs a lot. Lawrence, take a look at the NASDAQ now. You'll fall off your chair. I'm sure it's bad today, right? NASDAQ. I know tech is getting absolutely hammered. Oh, no, that's not it. Yeah, it's not doing well. That's why I sold off a lot of tech yesterday, day before. Boo. Everybody's moving into cyclicals. Chica Boy says, I don't understand Bitcoin well. I have tried to. That's the reason I won't invest. We should not invest in things we don't understand. Absolutely agree. Read those articles, Chica Boy, that I've linked. Maybe you can understand. Lawrence, who do you put your ISA with? If it's not peer-to-peer, it's mostly with stocks and shares. I use my ISA for stocks and shares. Steven says, any guests coming up soon? Yes, hopefully. It's just trying to get people to commit to dates isn't easy. How many of us have already retired? Not me. CGT won't go up this year, maybe next year. Okay. I don't know. Yeah, I mean, they'll probably do the budget. They'll announce the capital gains tax rise. It'll come into effect whenever they can get it done. But I know it's coming. I know it's coming. Aki Chap is semi-retired. Very nice. Do I think the stamp duty holiday will be extended? If I had a coin flip, I would say probably. Yes. It would make sense for them to support the economy by doing that. I mean, aren't we supposed to open up June? Is it June 21st, first day of summer? Everything will apparently go back to normal. Everybody will be vaccinated by this vaccine, whatever's inside that. Annabelle said, viewed the page, get reading during the next week and send to some skeptic friends too. Yeah, I mean, just get educated. I think that's an excellent article for anybody who we call them pre-coiners, people that don't really understand Bitcoin. They don't know what it's for. They don't believe in it. You read that. You read that. Cufflink, yeah, Cufflink has cash back. Cufflink has cash back on an ISA. Dave retired at 58. Very good. Nice job. Okay, I think that's going to do it for this week. Again, apologies for the tech problems. Next week I will definitely have them sorted out. I promise. And we will also go less than an hour like we do every week. Again, if you can hit that thumbs up if you haven't, please subscribe to the channel. Get me over that 1,000 subscriber mark so we can have another cryptocurrency giveaway. Maybe Amazon gift cards, who knows. Thank you for spending your evening with me. I really appreciate it. I adore everybody who comes on the screen. whether we have different opinions about things, I like the interaction and the chat about it. I'm always opening to learn new things. I don't know everything. These are just my opinions, but thank you for spending the time with me. I will see you next Thursday. Don't forget to join the Facebook group. And thank you again. Take care of yourselves. Make lots of money and be healthy and be happy. Spread the love.